Hello, and welcome to another episode of the Enrich Your Journey podcast. My name is Patrick Monahan, wealth manager, accredited investment fiduciary, partner at Quillogy, and your host of this podcast. So here's the deal for this episode. I've been in this business for over 16 years, and I have yet to meet one person that likes paying taxes. In fact, one of the top 3 questions and concerns that we hear from clients, prospective clients, family, friends, whoever, is how to help minimize taxes. So with that in mind today, I'm going to share a powerful retirement savings strategy known as Roth IRA conversions. Understanding this strategy could significantly impact your financial future. So let's dive in. First off, what is a Roth IRA conversion? Simply put, it's the process of moving funds from a tax-deferred IRA or 401k into an after-tax Roth IRA. That's the biggest component of all of this over the next several minutes I'm going to talk about. Just remember, you're going from pre-tax to after-tax. Now, you might wonder, why would anybody want to do this, especially since you will be paying taxes on the amount that you're converting from pre-tax to after-tax? Well, the answer to that lies in the potential benefits that a Roth IRA conversion can offer. Transitioning to a Roth IRA can be particularly advantageous for individuals who can check any of these boxes. One, obviously you have assets in a tax-deferred account. If you have lower income this year than you're anticipating in future years, thus you're in a lower tax bracket, it could also make sense for you. If you believe that we're in a short-term correction in the stock market, thus converting lower dollars into a Roth, expecting that to pop in the near future, also could make sense for you. If you believe that tax brackets are going to be higher in the future than they are today, that would be another good candidate for a Roth IRA conversion. If you want to maximize your estate for your heirs in a tax-free account, also a good consideration. And then lastly, if you want to diversify your investment accounts from a tax treatment perspective, a Roth IRA may also make sense for you. So in other words, on that last bullet point, if you have all of your assets in tax deferred, just diversifying some of that because we don't know what the future holds into a tax-free account. Maybe you maintain some of your tax deferred monies. You have diversification right there from a tax treatment perspective. So by paying taxes on the converted amount now, you can potentially enjoy tax-free withdrawals in retirement, which could be massively valuable if tax rates increase in the future. Massively valuable. I want to just reiterate that. Additionally, a Roth conversion can provide opportunity from tax diversification in retirement, as we just talked about, allowing you to draw income from accounts with different tax treatments, which may offer flexibility in managing future tax burdens, future tax liabilities. So having said that, it's also to consider that Roth IRA conversions aren't suitable for everyone. So number one, the biggest question, hurdle, concern, you may call it sometimes, that we get is if you're converting these dollars, as I mentioned, that's a taxable event. If your cash flow is tied up or you don't have the desire to pay the taxes on that converted amount, or maybe you're going to be in a lower tax bracket in the future. If you're nearing retirement, maybe you're going to a part-time job, your income stepping down. These are examples where maybe this doesn't benefit you. So again, if you don't want to pay the taxes from a cash flow perspective, or you think your tax brackets will be lower in the future, not higher, maybe a Roth IRA conversion or Roth IRA in general may not make sense for you. Furthermore, this is really important. The decision to convert to a Roth IRA should be made with extreme care. You need to talk to your financial advisor or your current, as well as your tax consultant. As a result of the Tax Cuts and Jobs Act, Roth IRA conversions are no longer reversible. We used to be able to what's called recharacterize these if they were done at a previous firm incorrectly. Maybe we found out the tax situation didn't make sense. Usually I only found out this was done in error or a mistake. You used to be able to reverse those, recharacterize those back into your IRA. It was an administrative nightmare, candidly, but that's no more. Once you convert to a Roth IRA, it's irrevocable. That's why it's critical that you understand exactly how this impacts your tax situation. You really need to consult with a financial advisor and or tax professional. I would actually say financial advisor and tax professional, not and or. Really important that you have your whole team working on your behalf to, again, understand how this may impact your tax bill and your overall financial plan. When discussing this strategy with our clients, we really focus on three things. One, reviewing their situation. What are their goals? Quantifying this may make sense for them, making sure they understand. Again, just really figuring out what their goals are. Number two, educating them on all the intricacies. As I mentioned, they're no longer reversible. It's irrevocable. We need to make sure that every client that's considering these just understands the impact of converting tax-deferred dollars to after-tax Roth. And then lastly, we do have the ability to run projections. So because this is a taxable event, if we put all your information in a tax planning software and you want to convert $100,000 or $500,000 from tax-deferred account to a Roth, being able to show that tax impact in a projection is extremely valuable so that you understand, does this impact you in anywhere else on your tax return? This is where, again, working together with tax preparer, financial advisor, super, super important that we understand the overall picture. It's also important to evaluate your timeline for this transfer. The longer your investment time horizon is, the more time your funds have to potentially grow tax-free within the Roth IRA. So if you are nearing retirement and you convert dollars, you pay the tax, well, you need time to make up for that tax bill that you just paid. Otherwise, this very likely does not make sense. So that's where every situation is different. This is a tailored plan for you. But if you have enough time horizon before you would ever utilize these Roth IRA monies, then again, could be a great strategy and something that's pretty attractive for you. So let's summarize. Roth IRA conversion can be a super powerful strategy for retirement planning, offering potential advantages, flexibility. However, as I said, it's not a one-size-fits-all solution. Careful consideration must be given. It's crucial before pursuing this strategy. So I would say the call to action from this episode is, reach out to me, whoever you're currently working with. If you think you may be a candidate for those bullet points, those 6 bullet points I talked about earlier in this podcast, reach out to somebody, have them run through a scenario or a Q&A with you to figure out and determine if you are a good candidate for a Roth IRA conversion. I'm happy to review the situation with you as well, but that's really it. So again, converting tax-deferred, tax-free, with the hope that tax-free situation can make a massive impact for you and your financial future. So that's it. I hope this episode has shed some light on the concept of IRA conversions, Roth IRA conversions, and provided valuable insights for your retirement planning. That's all for today's episode. Thanks for tuning in, and we'll catch up the next time on the Enrich Your Journey podcast. Take care.